So what's going on with BLNK charging stock? The EV charging company has experienced some wild fluctuations lately, mostly down as investors have become uninterested in unprofitable growth stocks. But what I wanted to do in this video is get a deeper look inside of the company to get insights into what's going on with the company. What are its near-term and long-term prospects? So that's what we'll do in this video. We'll take a semi-deep dive into the company's prospects and see what's going on. So you're not going to want to miss this if you're interested in BLNK charging stocks. So let's get into the details. Starting with the CEO's comments here in the conference call on February 28, highlighting the fact that global EV sales grew by 68% year over year, with electric vehicles achieving around 10% market share for the very first time. The vast majority of consumers who try an EV never go back to internal combustion engines ever again. So that's the interesting point. That's a good way to start this video, is just looking at the long-term outlook and the potential for electric vehicles overall, because electric vehicle charging companies like BLNK Charging are strongly reliant on electric vehicle sales, relying on EVs to consist a larger part of the overall vehicle fleet. So looking at EVs achieving just around 10% market share shows there's so much room to grow there, with so many governments around the world encouraging electric vehicles. It seems like this figure is headed towards a much higher percentage, certainly much higher than 10%. I don't know if the goal is to achieve 100%, but I think many developed economies are certainly reaching for a very high figure in this regard. So there's a lot of room for growth here, and BLNK charging is capitalizing on that tailwind for growth. As for BLNK, 2022 was monumental. Not only did we increase our revenue by almost threefold during 2022 when compared to 2021, we fundamentally changed what BLNK represents. So significant increases in revenue for BLNK in 2022, and 2023 is shaping to be a very high growth year as well for BLNK. So with our variety of ownership models, which range from simple network subscription to host owned to hybrid or BLNK owned and operated, we are intensely focused on consistently delivering excellent products and services with unparalleled customer experience. This is interesting. BLNK has chosen the business model to give customers the choice whether they want to buy and own the charging station, or whether they want BLNK to own the charging station. Regardless, BLNK is giving these clients the option of how they want to get a BLNK charging station on their property. If they want to buy it, if they want BLNK to put it, install it, and own it and operate it, it's their choice. And that gives BLNK a greater selection of customers to choose from, because if it was only selling the chargers and not offering to own and operate it themselves, then it was going to restrict themselves to customers that can afford that kind of an investment to build out these charging stations. Of course, very few places, enterprises, or you could think of maybe apartment complexes. Very few of these are interested in putting just one charging station in there. So when they decide to put in EV charging, they're looking at, I don't know, 4, 8, 12, something that can support a group of their renters or their customers to charge cars and to attract them to their site. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So for fourth quarter, revenue grew 184% year over year to 22.6 million. That's truly incredible growth here. If you're looking at a growth stock, this is truly a growth stock. Our service revenue grew by 213% in the fourth quarter to 5.7 million compared to 1.8 million in Q4 of 2021. This is important because service revenue is going to be at higher profit margins than the hardware revenue. So if you're an investor in this company, you're hoping for a greater percentage of service revenue over time. Adjusted earnings per share in the fourth quarter was a loss of 41 cents compared to a loss of 47 cents in the same quarter of the prior year. So that's good news. It's making progress to reduce the losses on the bottom line. And then the number of charging stations contracted, sold, or deployed grew to 66,478, an increase of 105% compared to the prior year. So really growing. I mean growing and growing fast here. And to support that growth, of course, the company's losing money on the bottom line, so it needs to raise capital. And it recently, on February 9th, raised $100 million by selling its common stock, and they expect these funds to take it well into 2024. So this money that they raised should last them all the way through into 2024, and if they hit critical milestones until that date, it's going to make it easier for BLNK Charging to raise additional capital at that point if they make good progress, hit their milestones, make progress on margins and profitability and all that. But if they don't, if they fall behind, and if they experience significant headwinds, it's going to be harder for them, more expensive for them to raise capital when they come back to the capital markets in 2024, which seems like what they are aiming to do. So BLNK is a combination of many acquisitions since we were founded, by adding complementary businesses gradually and strategically. Yes, I mean, this has been their strategy, rather than organically building out the capabilities and manufacturing and research and development that they feel like they need. They've been instead purchasing these things that they feel that they need instead of organically building them out. It remains to be seen if they've been effectively making these acquisitions and not paying too much for them. So it's a truly global business with over 66,000 chargers sold, deployed, or installed in 25 different countries, although North America, of course, consists a very large part of its business. But if you're investing in EVs or EV charging companies, this is the big thing here. Bloomberg predicts that by 2040, we're going to need anywhere between 340 million and 490 million chargers globally to meet demand. Today, we're not even close. We're only at roughly 14 million chargers. So this is going to need to increase by what, 25 to 40 fold from where we are today to where it needs to be to support the electric vehicle industry. So massive growth needs to be, well, I shouldn't say needs to be, but will likely be the story here for BLNK Charging and the rest in the industry as well. So if you're looking for a growth industry, this is certainly a fast growing industry with a very long-term growth runway. All right, so that's all I've got for this video. As always, I truly appreciate your viewership. I've hand selected a few videos that I think you'll enjoy, so please click on one of those and I'll see you over there.